Okay, so it's after class on Tuesday, February 28th, and I just want to take a second or two and just re-illustrate what we're actually doing with these consolidations. We have a parent, got a subsidiary, and they each have their own general ledgers, and each year we want to bring those together in order to present a consolidated financial statement. And when we do that, we actually set up work papers and those worksheets, which we'll call them worksheets, in order to bring the two general ledgers together in a meaningful form for the consolidation. We have what we call elimination entries in the process. Those elimination entries allow us to come up with the right numbers for the consolidated totals. And then, according to what you already now know, some of the elimination entries are getting rid of the investment account on the parent's books and getting rid of the equity income on the parent's books when they use the equity method, and getting rid of the stock and paid-in capital and retained earnings of the subsidiary that's on the subsidiary's books. So it's a combination of looking at each set of books and saying, well, what makes sense to show to the consolidated, and so the elimination entries take care of that. Once we've done that, let's say we did it for 12/31/15. Once we did that, since the books and records of the parent and the subsidiary stay the same, they don't have any of these elimination entries in them. In the next year, those books and records continue on, but without any of these elimination entries. They're below the line. So the parent's books, the subsidiary's books, don't have those entries entered into them. And so the next year, when we get to 12/31/16, all those books are without the elimination entries, and what we're going to do is we're going to just do it again for the new year. And we're going to come up with the same process, put it all together, get it consolidated. And in order to do that, even though we will have these worksheets, we'll have these to look at, we can see those, we have to create new worksheets for the new year. And that's really what's going on. That's why some of the problems will say it was bought 4 years ago, now we're going to do the consolidation, and you're going to do the worksheet for the year. You're not going to actually have the consolidation worksheets that you're just going to bring forward, which in essence what companies really do. But you can do a consolidated worksheet in any given year as long as you know enough information to bring the numbers forward into the current year. Let me know if you have any questions about this concept, because it is tantamount to the whole idea of consolidation worksheets.